watching the top story and the economic impact of the British referendum vote this morning. I want to bring in Allianz Chief Economic Advisor and Chairman of the President's Global Development Council, Mohamed El-Erian, joining us right now by phone. Mohamed, thanks very much for weighing in.
Thank you, Maria.
What are you expecting today as we continue to digest the aftershock of Britain leaving the EU, and now we've got this new petition, this call by some people in Britain to do a redo, a new referendum?
Yeah, I think this petition just adds to the general sense of political confusion. And as Anthony said earlier, as long as there is so much confusion, markets will have to reposition themselves. So we will see continued selling. The good news, and this is really important, is that the selling is orderly and that we are seeing rational differentiation. We're not seeing as much contagion as one would worry about. So the good news is that this is a orderly market reaction. The bad news is that the market has to respond and react and settle at lower prices.
We're looking at sharp declines in Europe, Mohamed, down better than 2% on all the major averages. Not as bad in the U.S., but connect the dots for us. Why should the U.S. stock market react so negatively to what is going on in Europe?
For three reasons, Maria. First, this uncertainty is going to knock 0.5 percentage points at least off UK and European growth and increase the chances of recession. Two, the markets were badly positioned going into this vote. The market had assumed that the status quo would prevail and that the Brits would vote to remain. Third, and I think most importantly, and keep an eye on this, is that this is yet another factor that eats away at the effectiveness of central banks. And central banks have played a key role in decoupling high asset prices from more sluggish fundamentals.
But you have written that the central banks of the world are largely out of tools. Can the central banks do anything about this? Are you expecting a response from the ECB, for example?
So I am expecting a response, but as you said, they're out of effective tools. So there isn't much the central banks can do about political uncertainty. There isn't much they can do about the slowdown. What they can do, and have done well so far, is protect the payments and settlement system. This is why this is not a Lehman moment. And this is really important. We're not going to have a sudden stop in the global economy, but we will have a slowdown. We will have uncertainty. We will have prices factor in that the central banks are less effective. And that's just the reality of us over-depending on central banks for so long.
Yeah, it's interesting that Janet Yellen pulled out of her meeting. She was supposed to meet with Mario Draghi today. And Mark Carney as well. I guess the events of the moment forced her to pull out so she didn't have to answer questions about the impact on the U.S.
Yeah, you never want to get together with other central bank governors if you don't know what you're going to say when you come out, because you raise expectations tremendously.
There you go.
So don't get into a meeting when people will immediately think, oh, they're talking about coordinated intervention and not have something to say. If you're going to meet with your central bank governor colleagues, make sure you have something good to say.
Let's talk about the financial services sector for a moment, Mohamed, because that's really the group getting hit hard. I mean, you've got companies like, Barclays and RBS halted briefly earlier because the stocks were trading down so much. Why are financials having such a sharp reaction to the downside?
Because they are in the midst of the storm. It's not clear what their future relationships are going to look like, and that's important for business. Second, the slowdown means that credit quality in their lending portfolio is going to come under pressure. And finally, let's not forget, yields are collapsing around the world and the curves are flattening, which means they're going to generate less income. I was asked on Friday, is this a time to get back into European banks? And I said, no, be careful. Now, we've seen them fall double-digit again. And I would just say, be careful. This is a particularly tricky area, and there are better bargains elsewhere.
Right now, you're looking at Royal Bank of Scotland down sharply, down 27%. I mean, you're looking at these banks lose a third of their value in one trading session. Mohamed, what is it going to be that you're going to look at in terms of a catalyst to give you a sense of stability in these markets? Are there things that you're watching particularly closely to get a sense of where things turn next?
Yes, foreign exchange markets. We need to see relative stability in the foreign exchange market. And if sterling and the euro continue under pressure, that will transmit volatility and pressure to other markets. So keep an eye on the foreign exchange market. General market stability is going to start from the foreign exchange market regaining their footing.
Is there anywhere to hide at this point? I mean, you say this is not a Lehman moment. and yet these markets are trading down. So what do you do as an investor at this point? Anywhere to hide?
So a Lehman moment is the sense that the global economy has hit a sudden stop, that the payments and settlement system isn't working, that maybe the banks are going to close. This is not it. But it is a moment of pressure on prices. I would focus on having a good cash buffer, and two, using that cash buffer opportunistically to pick up companies with strong balance sheets, high cash flow, and good management. And there's quite a few of them now that are starting to trade at very attractive prices.
And do you expect a recession next year, either in Europe or the U.S.?
I think the chances of a recession in Europe are a lot higher than the U.S. I would put the U.S. about 35% now. I had it at 30 before. I would put it now at 35%. Europe is probably double that number.
All right, we will leave it there. Mohamed, always a pleasure. Thanks so much for weighing in.
Thank you.
We'll see you soon. Mohamed El-Erian joining us there as we take